Hey, it's Matt with PriceActionTradingSystem.com, and it is Monday. It's November 3rd. This will be our chart lesson for the day. And a quick look at our daily chart as usual. We have the close outside of this channel, but we still don't have a new high yet. You can see we're still finding support at that midline. Even though we're just kind of working sideways, we had an inside bar today. We did close higher. We made a higher low, although we didn't trade as high as the previous trading day, but we did close higher. So at this point, it looks like we're going to try to bounce up here and make a new high and maybe go all the way to this high. I don't know. Um, but so far, this midline's holding, and you would expect prices to come back and test that midline before they go on to make a new high on this channel, and if we're going to test the upper side of the trend channel line. Now, we may not get back to this original high up here where this trend channel is. That's not a certain, although it's very possible. This line looks like it could be just a tad lower there, maybe like so. Let's adjust that just a little bit, and we will run this on out just a little bit. So there it is. We'll have to see what happens here, but I still think we'll probably make another new high before this is over. And you would think that would happen off of this midline. That doesn't mean we can't come back down here and test the midline on the bands first, or even come all the way back down to the original trend line. But the fact that this held here and we quickly moved higher, that would lead me to believe we're going to move on up some more before it's over. This is just probably, or maybe I should reword that. This is most likely just some consolidation after this big move up, because this was a really strong move up, and we were prices, and we had that gap which we came back, and did we fill that gap? We may not have quite filled that gap, and prices may be trying to fill that gap. The high there is 68.41 and a quarter. And no, we did not. We missed that by a few ticks. So that may be prices may still be trying to fill that gap, and they may not be able to because this midline is trending higher and higher. The further we go out here, the higher that we get away from that point with this midline. So anyway, that would be my guess as to what is happening. Prices are trying to fill that gap completely before they go higher. And at some point, if they can't go lower, they're going to give up and go higher. And so we'll see what tomorrow brings, but I wouldn't surprise me at all if we don't rally tomorrow. Again, there's no guarantees on that. We could still trade lower here. There's still some space in that gap. The midline for the bands is way down here, which that could be the next target. If we get through here and we keep going lower, that would be the next target. And then the trend channel line, or any of these bands, but the trend channel line, or the trend line would most likely be the next target if we keep going lower. So anyway, let's flip over to the 2000 tick chart, take a look at it, and we'll go through the trades. And you can see it's just a neutral kind of day. Really what happens is we trended lower, found the bottom, and then trended higher. So that's kind of how I would describe this day. But let's flip over there and take a look. Okay, here's our chart. You can see we had the big downtrend, and then we reversed. We got a spike up and just kind of went into a channel there. And then we sold back off some more, and then we rallied back some more just before the close. So this is really just kind of a one big range day. I would probably mark this up here, and you can see the supports right along down here somewhere. I'd probably call it right along there. Maybe a little higher. Yeah, maybe right along there. And you can see we had what most people would call an inverted head and shoulders down here, but that's a V reversal again. Those are pretty strong reversals usually. You can see that turned out to be a pretty strong move up before we just kind of chopped back down and then chopped back up again. So, and you can see prices are pretty much finding resistance at that midline there. That's why we kept turning back down there. So I didn't think this was going to be a range day when we kept going lower here, but I'd still say this is mostly a sideways range day. We did break out below that with this inverted head and shoulders type pattern, and believe it or not, this one actually did play out when it broke higher, it went higher. But don't trade those patterns. You'll get burned most times because they're very low, very low probability that they're going to work out in your favor. And I hear people talking about them all the time, and yeah, sometimes they do play out, but they're not consistent enough to trade that. Use our price action strategies. That's all you need. When you got the triple test here, you knew it was going higher. That's what you really wanted to see. So you actually had what you could probably argue there was a triple test here, but it wasn't a good enough signal bar. But it comes back and gives you a better setup, and then look at it go. Same thing here. You got a triple test. It took off. So use our strategy and not this. Don't try to trade this head and shoulders. What happened down here had no bearing on this entry right here. So anyway, let's zoom in here and we'll go through the trades. All right, your 7 o'clock came right when we're turning back down here. You might argue that looks like a reversal, and it is near the highs of what looks like could be a range setting up. But I don't think I would trade that as a reversal. This didn't break higher. It does make a swing low right there because it does make a higher low there. So it's basically, the other problem with that is you're having to go short right into the low of the move. You want room to scalp out. A really good reversal would look similar to this, but you would have more room to scalp out. If it's in a huge downtrend, maybe you'd still go short there. But if you're looking for a reversal, I would wait. I'd wait on something better. But anyway, you actually get a second entry long here. Notice you're working down. You get a close outside. 2 swings to a new low and a nice signal bar. Sometimes I'd mark this green, but that being a true second entry long and already a close outside the trend line, I'm probably going to take that trade. Plenty of room back to the EMA. You're way away from the EMA. This was also somewhat of a range, and so it's probably going to snap back as we teach you. And that's exactly what happens. It snaps back really quickly. You actually get a higher low here. You cannot trade that on the engulfing bar. Wait for it to close. If you want to go long one tick above that, have at it. I like that setup. And you can see that failed breakout led to another new high. And that's a big, strong move up. Very high momentum. And there's another second entry here that I failed to mark. But notice you come back, you get a first entry, you pull back, and you get a second entry here. You got to wait for this to close and just go long on that second entry. And that's another easy move up. I mean, with these two setups here, that's probably all you need today. And I talked about that Friday. One of the traders sent me his 2 trades and said, he was done by 10 o'clock and he found his 2 trades and he made his salary for the day. And if you work on that and stick to that strategy, over time you're going to build wealth. No, this is not a get rich quick scheme. So remind yourself of that. If you treat day trading like a get rich quick scheme, you're going to fail and you're going to go broke. You're going to go broke. But if you come in here and you look to make you 2 or 3 trades a day, get you a monetary goal, but this is only after you've proven you can do this, then find you a small monetary goal. Maybe it's just $100 a day starting out, something reasonable. And when you can start making that $100 a day every day, then maybe you go to 200 or 250. And then once you can do that consistently, maybe you go to 3 or 4 or 500. But try to build slowly. Don't try to build too fast, because if you try to do it too quickly, And don't be afraid to back up if you suddenly jump up in, because building leverage gets harder, because the more leverage you, and you're not used to trading that extra leverage, then you find yourself getting the leverage affecting your thinking. And if that happens to you, just don't be afraid to back down again to wherever you were last successful, and keep working on it until you can slowly build to another level. So you can't add 10 contracts or 20 contracts right away. You need to build one or two contracts at a time and get used to trading that extra leverage. That's where people make their mistakes. They start making a little money and then they think, well, I'm going to trade 25 contracts or 50 contracts. And then one or two trades and they're so shook up they can't ever make money again. So don't do that to yourself. But anyway, second entry long there, a nice signal bar, moves up. And there's actually, uh, if you had a little better signal bar up here, maybe you go short right there. But I would wait on the lower high, which does not come. And of course, you get a lower high, but that's not a tradable one. And this thing just the bottom falls out of it. But we get down here and you get a quick second entry right here, and that's another nice move. And that takes you into the news item. I forgot to mention there was a PMI at 9 o'clock. So sit that one out. And really by about 9:05 or so, prices had played out. I mean, it wasn't really a big move, but, give it 5 minutes or whatever. Be out, be flat, 10 minutes or so prior. Just be flat before the news comes out. But don't take any new trades about at least 10 minutes prior. And, you can wait. If you were in this trade right here and you're riding it down, yeah, you can wait till right before 9 o'clock, and that would have let you ride this all the way down to maybe right in here, and you would have been out, and you would have missed all this. And shortly thereafter, by 9:15 or so, you get another nice second entry here, second entry short. Look at that move up. Close outside, move to a new high, and that's a second entry short, way away from the EMA. And there is some resistance across there. I'm going to take that one. Then we drop down here, and here we get the triple test. That little backup right there could count, then two, then three. And it's looking like we're setting up a range down here. But that's a big bearish bar. As long as you got room to those last swing lows, as you can see, take that trade. And man, because you don't know it's going to do this, but you never know that if you might catch that. And that turns out to be a really big, nice move down again. So this has been a really good trading day just by 9:30. And of course, it trends running down, close outside a couple of swings to a low, and you get another second entry short down here. I'm sorry, second entry long. And boom, off you go. You do get a higher low in here, but I don't think you want to take either one of those. And you can see it just kind of chopping. Then it takes off again. There's a tighter channel within this green one. At the time I posted the chart this morning, I wasn't sure if the green channel was valid, but obviously it was. Notice how we played off the top, then we came back. You actually had a second entry long here, but I wouldn't trade that engulfing bar. It's still inside the down channel. But we do break out, pull back, make a higher low, at least a triple test. I'd count that. You could really count that as a second entry because this is just sideways stuff. So that's a first entry, second entry, quadruple test, nice signal bar, boom, off it goes. You're moving up. You could actually, somebody will probably ask me about that one. You could argue for it to be green. I'd wait for a lower high, and you don't really get one. Now there's another second entry long here, but that's an inside bar, and this is all just too choppy. Again, there's a signal bar, there's a nice bullish bar here, but it's an inside bar. And finally, you do get a breakout, so that one is tempting, and but again, it doesn't really make the high. It's so close that you might argue for that. We've talked about that before when you're trading a range like that. If there's one tick difference, you might treat this, you may not worry too much about that one tick, and you can just say, hey, this is just like an equal high. And I'm not going to give that a red, but you might play that as just being a little more aggressive. And of course, it breaks out the low again. We end up with support. I treated this as the range. And this was just another support line down here. And there's actually a second entry long here, but it's not a perfect signal bar. I do think it still closes in its upper 1/3, but I gave that one a green, thinking you're probably better off to wait on the high or low, which comes here, and then it takes off. That was the better entry. And then there is a second entry here, but no setup. And then you're working back, and this is like this entry down here. If this, you do get a close outside and a new low, but this is like a 1, 2, 3, like a fourth entry. I think you got to wait on the high or low here, which comes here, and so I like entering on that one. You can see it run straight up. And then again, there's actually a second entry short up here, but that's not a convincing close outside. This thing could break lower and turn up one more time. But it runs down, you get a first entry, and there's actually a second entry there, but that signal bar, you can't trade that. And we run on up, close outside, new high. I wouldn't go short there. I don't like that signal bar. But yeah, it runs on down, close outside. It doesn't quite make a new low, and it makes a higher low with a second entry, and that's a good signal bar. I like that one because it's going to probably run to make a new high here before it does anything different. You can see it runs on up. You actually get another two-legged move back to the EMA right here. It's just so close to that midline where you're finding resistance. I just felt like you have to skip that. And you see it takes several tries before it pushes through. And then it makes a high, and then it makes a lower high. I marked that one as green. I'm not crazy about that one. I'd prefer there to be more room between there and the EMA, but there's reasons to take that, and you can see it works relatively easily. And then you get a break, move to a new low, and it reverses. No setup to go long there though. And then we keep finding that resistance right up here at the high, and you made a 1, 2, 3. I didn't like these because it just looks too sideways, and there's not really good signal bars. There's too much stem there, in my opinion. And then it makes that break higher of all those 3 highs there, and reverses and makes this big bearish bar go short right there. A lot of times that thing will take off. It's an easy scalp. You might have got a runner on here if you held out on this pullback. Most likely they'd have got you here. I think you'd have scalped out before that, if I remember right. So yeah, you would have scalped out, and then that probably would have got you, depending on how you played it. So you probably wouldn't have got a runner on it, but you don't get a break till way down here, and you actually get a second entry short here, but that signal bar that's too congested and sideways. Then we bottom out down here, and that's actually a second entry long, but I don't like that signal bar. And then this one was tempting. You do get your close outside in a new low, so if you took that one, I would give that a green. It just looks a little congested, but you're way away from the EMA, so maybe you take that one. You'd be better off if you got a higher low there, which you might argue, hey, here's one, but I think you've moved too far. And then you end up getting a second entry short. Notice your move up, close outside, move to a new high, and that's a second entry short. I like going short right there because this is played out over here, so we should be starting to work lower most likely. And of course, we run down and we're in this trading range here, or just a range. Now this one's tempting. Again, you might give that a green because it's still inside the range, but it does make a new low there. So again, you're probably better off to wait on the higher low, which doesn't come to way up here. Now you got no room to scalp out. No signal bar there. And finally you get a failed breakout. But notice that tight channel working down, and there's no close outside of that and new low. You're still in that down channel. It's a little wider than that. So I don't think you want to risk that. Even though you're that far away from the EMA, I think you need a higher low there, and you don't get it. We run back up. We run all the way back up to, of course, you get a close outside here, a new high, and then you're just chopping sideways. We do get this big bar here, so if you've got room, take that one because you got at least, you've actually made a triple test here, now a quadruple, another test. So, I mean, that's a really big bar. I think you can still argue for it to be red, though, as long as you got room to scalp out. And you could, and you see you got room there. You could, what you might do is let this break lower and back up a little bit and drop an order. And you see, you probably could have got filled way back to here. Maybe not quite that far. I can't remember how far it came back after it broke lower. So, but that's tradable for sure. And then you get one to the upside, and you do get a close outside and a new low on this one. But again, I don't know if you want to take that. I think you wait on the high or low, which comes here, and now you don't have much room back to these highs. And you got more of a downward bias here. So you can see what happens on the next bar. It's kind of a no-bodied bar, and then it pushes higher again and fails. When it does that, you've had a triple test there. I like going short. It's also a second entry short. That's going to act as a trap most likely. You can't take the lower high because you just don't have any room left, and that takes you, it would have worked, but that takes you on into 230. This one here, it's close to being green just because it's getting so close to the lows. But the fact that we'd already broken lower here, I tend to like that one because of that. And notice the last one even pushed through a good bit, and this one does the same. So, and then of course you do make the lower high that takes on off, but you just can't enter on that one because there's not room there. So, but yeah, that's how I saw it. Again, maybe the long here. It does have room to. You would have been able to scalp out on it. And it does have a close outside the new low. So maybe you take that. Maybe you mark that green. But when this can't get above, that's such a big bar, not getting above that one, and really you've got 3 attempts to go higher that have failed right there. So that makes that one tough. And if you took that one, when this closes a doji, I would have got out instantly with whatever it would give you on the next bar. So you could have probably got out with 1 tick, but you definitely could have got out at scratch. And it looks like it did go higher. So you probably could have got out with a tick or 2 on that one. But when you got this doji right there, that was not a good sign because you can see it's just sideways now. So this thing should have run on up to the top highs, and it didn't. So, but anyway, there it is. I mean, that's why I like when you have a chance to make all these easy trades this early in the morning. Don't hang around and keep trading in the afternoon and give it all back, because you see how much more choppy. And I mean, these were really good moves here. You're moving strongly upwards, strongly down, then strongly upwards, and then you start getting in this choppy stuff here. And that's when it gets harder to trade. You can get whipsawed just real easily. And you can get trapped on the wrong side. So the key is that I always love to trade between 7 and noon. And generally, most of the days, you can be done by 10 o'clock. You can get your 2 or 3 trades to meet your daily salary target and be done by 10 or 11 o'clock, definitely by noon. So anyway, there it is. Hope you had a good trading day. I'm going to wrap it up. We'll be back again to do it tomorrow. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.